Welcome to the first R&D Incorporated YouTube video. Uh, this is Nex and Drew over here, right?
Yup.
Okay, we're gonna go over every day of this week, what trades you should have taken, what setups you should have looked for. Let us know in the comments if you want us to possibly do a trade strategy on, how we've been trading and what model we've been using. Um, you can basically see it from how we're gonna go over this recap. Okay, coming into, let's see, we're gonna cut it off right there at this. Okay, where's that 9 o'clock candle? I want to cut it off there. Okay, 9:30 open, 9:10. All right, this 9 o'clock candle is our limit over here. We're not gonna look at anything else. Okay, so usually 9 o'clock pre-market for New York opens. So actually, I want to say 8 o'clock. But so just use some horizontal rays here. I'll make them black so you can see. We have Asia session low here. We have a huge gap that was not filled. Asia session high was automatically taken out by London. London highs are up here. Sorry, up here. London lows are right here at this point. Okay, here we go. We go into the market. Macro is at 950. So mark that out on our charts. Okay, 950 opens. We take out a key. Well, yeah, we take out a key level here, right? Liquidity sweep. Okay, what do we notice? We create another high here, right? So we have relatively equalish highs. They're not really close, but we see this. So that's going to be my main draw on liquidity. I don't think we're going to come all the way down here. Okay, we have this fucking huge imbalance here. When you see a huge imbalance like this, likely, not 100% of the time, but likely it needs to be filled, right? So we open, we take out London lows, which are in this imbalance here, right? Boom. See this, right? Automatically what we do, it's gonna bring me all the way back here, which sucks. But what do? See imbalance, scale down to the 1 minute, right? Scale down to the 1 minute, right? Once you see that 1 minute, we see a break of structure here on the 1 minute, right? Both these highs, right, here and here, get broken with this candle. So what do? We're gonna take a long position off the closure of this candle, place our stop loss below these lows. Our target price, your take profit could either be here, right? Could be here. I like to play it safe and go personally for these options that are closer to where price is gonna move. It is a fucking long trade, right? You might have to, boom, sit in this trade for a while, but you get edged here. You might take profit, after you see this like a little fall down. But I like to hold my shit until either I get stopped out or my take profit gets hit, or there's like a specific confluence that is telling me get the fuck out of this trade. And for me, that specific confluence was right here at this fair value gap once we inverse it. So I'm gonna adjust to show you my trade. I'm just gonna adjust that, right? So right here was my take profit. If I can, boom, right here, which is not even bad, right? You can hold it, but I like to play it safe. Two and a half risk to reward ratio. I think that would clock you. So 129.6 is do some calculations. I believe that would be $1,612 on one trade for one contract, which is very fucking nice because you're only risking 50 ticks, which is $625. Great trade in my opinion. That was Monday's trade. It's basically how we do it. Any words to say, Andrew?
Ah, that inverse is a very
Powerful.
beautiful thing. Yeah, it's very powerful. Once you spot that, you either know, and best case scenario, everything pretty much happens the opposite. The opposite can happen, but once you see it, pretty easy to figure out how the market moves.
Yeah, seeing this and then re-inversing it here, it's just telling us. Well, just ignore this actually. Seeing this, an inversion of this, makes me want to get out because it's telling me there's a shift in price action, a shift in the trend, a shift to the downside. But yeah, basically our how we caught like 1600 on Monday. Usually I don't like to trade outside of the macro, but I was just looking at the charts and I saw this and automatically got into it. Um, but yeah, it's a lot of retests of this fair value gap here. It's how you know. Seeing multiple retests that it's a valid fair value gap. It's a strong fair value gap. But that's it. Yeah, we will catch you in the next video.